Okay, so let's get into it. We're doing a deep dive today on something that I think is really critical, especially for you, the fleet owner, navigating the incredibly challenging landscape in South Africa.
Hmm, it really is.
I mean, we're talking about tight margins, costs that just keep going up, and client expectations that somehow get tougher every single year.
Yeah, and the material you shared with us, the learner, it highlights this really common, almost dangerous misconception we need to tackle right away.
Which is what?
Yeah,
The business review is just a quick look at the bank account.
exactly that. For
Yeah.
most operators, it's just this surface level gut feel check.
Right. You check the balance, you glance at the total revenue, make sure the trucks are out on the road.
Uh-huh.
And if money came in and the wheels were turning, you just sort of assume, okay, we're doing all right.
And our mission today is to move completely beyond that. I mean,
Yeah.
if you want a sustainable, profitable company, a proper business review isn't a luxury.
Okay.
It's a necessity.
It sounds like it's about getting real visibility.
That's the perfect word for it. Clear, honest visibility, financially, operationally, and strategically. So you can make decisions based on facts, not just, instinct.
Okay, and this is where it gets really interesting for me because the first step, according to the material, is a mindset shift.
Hmm.
It stresses that a proper review is absolutely not about finding fault. It's not about blaming anyone for past decisions.
It's just about clarity, pure and simple.
And why is that clarity so vital? Why is gut feel so risky in this specific industry?
Well, because the trucking environment, especially in South Africa, it just strips away your margin for error so fast.
It vanishes.
Gone. So if you're just relying on instinct, you're constantly exposed. Fuel prices could spike tomorrow. Tire wear is faster because of road conditions. Clients stretch payment terms from 30 days to 45.
And those little things add up. The source also mentions how just one bad breakdown can wipe out weeks of profit. Can you, break that down for us? How does that actually happen?
Sure. Let's say you have a truck that brings in, 8,000 Rand in net profit a week.
Okay.
If that truck has a major failure, like a gearbox issue, and it's off the road for 3 days for diagnosis and repair, well, you've lost 3 days of revenue for a start,
Right.
plus the repair itself. That could easily be 35,000 Rand or more. So that single event has just wiped out over 4 weeks of net profit from that one truck.
Wow. And that's the danger of just going on instinct. But here's the thing. If I'm a smaller operator, I'm already working 16 hours a day. Where do I even find the time for this? Isn't instinct just faster?
It's faster, yeah, but it's often wrong. A good review process isn't about spending all day with spreadsheets. It's about setting up a system that flags the few key metrics that stop you from being surprised by your own business. Give you a baseline, a reference point.
Let's pivot to the numbers then, because this feels like the biggest mistake people make, focusing way too much on turnover.
Oh, absolutely. High revenue is seductive.
It makes you feel successful, busy, but the material is clear. High revenue does not mean a healthy business. It's a red herring.
It's a total red herring. We see it all the time. Businesses with massive revenue, trucks running flat out, but they are terrified of payroll at the end of the month.
So the review has to ask the harder questions.
The much harder questions about true profitability.
Yeah.
You have to get away from averages.
So what's question number one?
First, are my routes actually profitable after you account for everything? Fuel, tolls, tires, maintenance wear for that specific trip?
Okay. And second,
Which specific trucks are making me money? And which ones are just quietly draining my bank account?
I thought this next point was fascinating because it feels a bit psychological. It's the danger of holding on to assets just because they're paid off. They feel free, but they might be the most expensive things you own.
They often are. It's a huge psychological barrier. You've got this, say, 15-year-old rig. It's debt-free, which feels amazing.
Yeah, of course.
But if its fuel consumption is 15% higher than a new truck, or it needs 8,000 Rand a month in, surprise maintenance.
Which happens a lot with older trucks on those long routes.
Exactly. Then the true cost of owning that free truck is way higher than a newer financed one that's under warranty.
So the review forces you to see the opportunity cost. It shows you the profit you're just leaving on the table.
Precisely.
Yeah.
And in the South African context, that's not just a nice-to-have insight. It's the difference between scaling a real business and running a very expensive hobby.
Which brings us perfectly to cash flow. The silent deal breaker, as the material calls it. This paradox where a business can be profitable on paper.
But still fail because they run out of cash.
Yeah. Why does that happen?
because a cash flow problem is almost always a symptom of something else. A deep dive has to analyze the gaps in the trucking cycle.
You mean the gap between when you spend money and when you actually get paid?
That's the big one. You pay your drivers weekly, you pay for fuel daily, but you might not see that invoice payment for 45 or even 60 days.
Right.
So the review looks at things like your days sales outstanding, your DSO. Basically, how long are you acting as the bank for your client?
And if you don't have enough cash to cover that gap, that's when you start stressing about making payroll or paying the fuel bill.
That stress is the symptom. The review finds the cause. It looks at your supplier credit, your fuel cards, and asks, are these things actually helping, or are they just masking a bigger problem that's going to catch up to you?
Okay, so let's say the numbers show a truck should be profitable, but the owner still feels squeezed. Where's the disconnect? Is that where operations come in?
That's exactly where it is. Operations can look fine on paper, but the review has to connect what's happening on the road directly to the financial results.
So you're measuring utilization.
Relentlessly. How much time are your trucks actually standing still versus earning revenue?
So if I think my truck is running at 90% utilization, but the review shows it's really 75%.
That 15% gap is pure profit walking out the door. And we have to figure out why.
Is it breakdowns?
It could be. Are breakdowns on the rise? That's often a warning sign of a much bigger failure coming down the line.
What about road efficiency? Are we just doing things out of habit?
Inertia is expensive. An operational review has to challenge things. Empty kilometers, for instance. Are we minimizing those? Are we routing drivers efficiently? Are we supporting them?
And ignoring these little inefficiencies just makes them more and more expensive over time.
Right. A good review doesn't just critique the driver. It critiques the system the owner has in place. It shows where the reality on the road is different from the assumption in the office.
Which leads us to risk. The material says the danger in this industry isn't the risk itself.
It's the unmanaged risk.
So what are those key vulnerabilities that a review has to find early?
First is concentration risk. You know, how much of your business is tied up with one client?
Putting all your eggs in one basket.
Pretty much. If losing one contract means 40% of your business disappears overnight, you're not diversified. Second is what we touched on before, fleet age. You need a real replacement plan based on data.
Not just, oh, I'll buy a new one when this one dies.
No. You need to know the point where the cost to maintain an old truck is actually more than the cost of a newer, more efficient one. Third, you have to look at your debt structures.
What does that mean, debt structures that restrict flexibility?
It means looking at the fine print. Have you signed something that ties up all your assets as collateral for one loan?
Oh.
Because if you have, you might not be able to sell an underperforming truck or refinance for a better rate. The review checks for those financial handcuffs.
So by seeing the risks, you can make a strategic reset.
Yes.
Yeah.
The review forces you to ask, what am I building here? Is it a business designed for growth? For stability? For an eventual sale?
It moves you out of firefighting mode.
Exactly. It connects what you do every day to where you actually want to go.
Okay, let's talk timing. Because the material calls this the crisis trap. Most people wait until things are already painful.
Yeah, they wait for the sleepless nights, the rising debt, the big client loss.
And then they call for help.
When the truth is, the best time for a review is before any of that happens, when things still feel under control. It's about being proactive.
You can adjust your pricing before you start losing money, not after.
You can restructure your assets when the business is stable. Small problems that you ignore in trucking always become huge, expensive problems down the road.
So if someone does this properly, what should they walk away with? What are the actual outcomes?
Okay, we can break it down into 6 key things.
Let's do it. Number 1.
Clear visibility. You know exactly where your money is made and where it's lost. By truck, by route.
Number 2.
Confidence in the numbers. You trust your data.
3.
A realistic, honest view of your operational performance, the good and the bad.
4. And this feels like the most important one.
It is a practical action plan. Not just a report with observations, but a list of things to do. Sell this truck, renegotiate that contract.
Okay. Number 5.
Peace of mind, knowing your decisions are based on facts.
And finally, number 6.
It's the big shift. You move from just surviving day to day to running your business with real intention and control.
You know, running a trucking business, especially in South Africa, you have to be an expert in so many things all at once. Finance, HR, logistics. A proper review feels like it gives you the perspective you need, so you're not fighting all those battles alone. You get objective guidance.
And that leads us to the final thought from the material, which is, It's just such a powerful metaphor for all of this.
What is it?
A trucking business doesn't fail overnight. It's not a sudden crash.
It's a slow leak.
It's a slow leak. It drifts there, slowly, through all those little inefficiencies and missed insights we've been talking about, and a proper business review. That's the only thing that stops the drift.
So the question for you, listening, is when you stop reacting to your business and you start leading it with clear facts and a real strategy, what is the next strategic horizon you're going to define for yourself? That's the knowledge this deep dive delivers.